into it.
All right.
What time is it over there where you are?
It's like 11.
Oh, okay, yeah, same here then.
Yeah, same time zone.
Yeah, yeah.
Um. Yeah, we'll start at 11:05. See if anyone else trickles in.
All right, cool.
I know Yusuf probably wants to.
Yo.
Oh, you're here. What's up?
Yeah, sorry, I was doing some coding assignment.
Coding assignment? I thought you were in business school.
Yeah, I know. They make us do like computer applications that we use in business.
No, that's good.
Brody thought I was about to miss the lesson, eh?
I was like, yeah, what is this guy doing?
Thought I was about to miss the lesson, bro.
That'd be the first lesson this guy missed.
Never catch me lacking like that. I don't know
True.
what you thought.
True.
I would never. All
right. So, I think the lesson we're going to do today is going to be on market cycles. Essentially, we're just going to talk about how price moves. Price is usually moving in two ways, right? Price is consolidating or price is directionally moving, right? So, really, there's four phases that we can identify, right, in the market, and that's the following four phases. So, there's four phases. So, there is consolidation, number one. There's expansion. There's reversal. And there is retracement. Now, four things are harder to learn than just two things. So this is what ICT teaches you. You're now just going to think in terms of this. All of market cycles can be condensed into just two things. The market is either consolidating or expanding. So you gotta know, right? A reversal is a form of expansion, and a retracement is a form of expansion. Now, the direction of these expansions is what these terms mean. A reversal is a change in the character of the expansion, right? So this is a reversal, where we change the character of the delivery, meaning we start reversing trend. And a retracement is a continuation of the trend, but a lower move. Like this would be considered a retracement. Both ways, these legs are forms of expansion. They're not consolidation. We can try and better understand the market in terms of just consolidation and expansion, and then recognize that retracement is expansion that can only occur at a higher time frame PD array, right? Whoops, not retracement. Reversal is an expansion that can only occur at a higher time frame PD array, and a retracement is a rebalance or reaccumulation in a directional movement towards the doll. Both ways, right? And this is again is an expansion, is a expansion that rebalances or reaccumulates. So, oh fuck. So if we can understand that the market is either expanding, right? And expansion is just gonna be like displacement. Right? If we can understand that expansion, reversal, and retracement are all the same thing, the only thing that changes definitionally is the direction, right? Then we'll understand that the market books consolidations and expansions. Now, it's also important to notice what the market can and can't do. So if we have a delivery spectrum, right? Let's make this black for now. So if we have like a delivery spectrum and we have expansion here, right? Consolidation here, retracement here, and reversal, right? We have to understand that based on this logic right here, right? how these things can work. So let's talk about directional movements. At any point in time, the market is permissible to go from an expansion to a what? Someone tell me.
From expansion to a consolidation or retracement. Or
Yeah, it
reversal.
can only go consolidate.
Yeah, so the market can go from an expansion to a consolidation, all right?
Yeah, but can it also go from expansion to reversal?
Yep.
Or expansion to retracement?
The market can go from an expansion to a consolidation, an expansion to a reversal, and an expansion to a retracement. Yeah. This is how the market can move from an expansion. So if we're starting with an expansion, right, it's permissible for all three of these things to happen. Now let's take a look at why this is true. Again, we always prefer narrative over rules. Okay? So, wait, quickly, I said I would, because there's people who aren't here, I said I'd do a quick market review. Before we get into that lesson, let's quickly do a market review today. I'm going to make it really quick, though, just for the recording people. We'll do some top-down analysis quickly. So, day open, this is how I saw the market today. We expected, like yesterday, like I said, to form an inside bar day, right? We didn't want to see this high taken. We didn't want to see this high taken or this low taken, probably just because it didn't fit the profile for an expansion week. Meaning this low put in right here, which was on Tuesday, manipulated too far down in the weekly range. This wick is too large for it to be a classic buy week. If that doesn't make sense in our one-on-one, you can ask me about that, and I can try and explain to you what that means. Essentially, this manipulated too far down, right? So now this move up here, right, retracing this entire move lower, is not going to be permissible in the weekly profile. So here's how the market moved this week. We put in our low of the week, right? Inside this, let's see the daily chart. After sweeping out this daily low, we'll make this different color. This was our low of the week, right? And then we had essentially a LR run all the way up until it became high resistance liquidity. So for the rest of the week, we continued to displace, right? Now, as you guys know, the difference between LR and HRLR, right? So LR looks like this. Right? This is LR. And then this is HRLR. Okay. This in here is HRLR. LRLR is defined by something like a trend line, right? We have lower highs, lower lows, whereas HRLR is defined as high resistance liquidity that is taken, essentially liquidity sweeps, and then you have this LRLR component down here. Okay, that's a difference. So as you can see, the market rebalancing this, given the weekly expectation again, which was for it to be an inside bar, and I've been saying this for the majority of the week. And again, if that doesn't make sense, then review weekly profiling, and if that doesn't make sense, then you have to ask me about it. But this is the dealing range for the week now. Right. Let's do it this way. Oh, I was right the first time. We have discount and premium, okay? So anything above here, anything from here to here, let's get rid of this 75% level. Right, this is discount of the dealing range, this is premium, this is equilibrium of the dealing range. As you can see, if I extend this over the entire thing, you can see that price moves from the discount, the weekly low, back into the premium, forming the weekly failure swing, right, which was today on Friday. So this move higher all week, let's keep this dealing range in mind and look at the hourly chart. Right. First of all, we can see that Monday is obviously manipulating the weekly range. Again, why is it manipulating the weekly range? We have a SMT right, between ES and NASDAQ. Let's pull up our ES chart. Oops, I need to do a new price scale so I can actually compare them. Okay. Where is that SMT? Did it form at the high? Did we have an SMT at the highs or no on Monday? I'm trying to remember.
On Monday, I don't think so.
Right. I think it was here.
Yeah, it's right there. If you take it from Friday, if you look at Friday, that high on Friday, on ES and NAS, you see
Where?
the high of the day on Friday. That.
Yeah, here.
Yeah, I think it looks bigger on ES.
It's not a divergence, but I know there was something. Maybe it was intraday. I'm trying to remember. A lower time frame. Yeah, it wasn't on my hourly chart. Maybe it's a lower time frame. No, maybe. I could have sworn there was an SMT. Sorry, I'm just. This is not really that important, but. I guess there was an SMT. Let me see Dow. Ah, there we go. Dow forms our SMT. Okay, there.
Is it on Dow?
Yeah, I'm gonna get rid of this. So, we cap the weekly manipulation. Like we start the weekly manipulation with this SMT. There has to, by the way, the reason why I needed to see an SMT there is there has to be an SMT. And if that doesn't make sense to you, then again, ask me my one-on-one. I'm not trying to make the whole lesson about this market review, but there needed to be an SMT there with something. So this is an SMT with Dow. So that's showing us this is our weekly manipulation, right? Higher on Monday, forming the Monday high of the week. We have the Tuesday low of the week, essentially creating this range. So we have this week as an inside bar. So we have this range we've now created. So the week closed off like this. If you look at a weekly profile, this is what it looked like. An inside bar week. The definition of an accumulation. High resistance, then low resistance. So we have this SMT with YM up here. So we can look for this manipulation profile. Right, go to the 4 hour, we'll see it better. We want to now project this move lower. As you can see, we come into this fourth deviation. Right, you can use this low right there, or even this low right there. Right. We come into this fourth deviation, this turtle soup area. I actually like this low more though. Right, so we come into this 3 to 4 deviations, and here is where we get our weekly reversal. And once we hit this fourth deviation, which again is aligned not with a random point in time, but this is our daily ERL, right? Daily ERL is right here. So we have daily ERL plus fourth DVT. Fourth DVT is equal to reversal or retracement, right? So we're going to look for a reversal or retracement somewhere in this area. And what we expect is to see something like a premium or redelivered, right? So now we have, again, the weekly range. Once we come into this area, which is a high likelihood to be the low of the week, taking out daily liquidity, make that blue, right? So now we can look for a move back into the range. And at this point in time, you could have thought it was a classic buy week, but remember I said that this move lower was just too low for me to expect the entire range to be retraced. I would have preferred to see an inside bar, so something like this. Exactly what happened, actually, right? Yusuf, this is exactly what we thought would happen yesterday, right? We come into this entry right here, and then we just end the week somewhere as a down close candle, right? As you can see, a down close body. But let's review each day quickly. So essentially, in this week, we have this area where we can look for a price to reverse from, and then we have this, displacement in here. So as you can see, let's again compare our, to qualify that we have an actual reversal here on the weekly profile, let's quickly pull up our ES chart. We need to see an SMT at the lows to qualify a reversal or a retracement, or else it can continue. In our mind, it can continue lower. So let's see if we can see that. And we do see that, right? So we're going to look at this low. We're going to extend it out to this low. All right, do you see how? Oh, it actually does take it. Is there an SMT on ES, or is it Dow again? Might be Dow again.
On US 100 there was, but I don't know if on NQ.
On NQ, I think it might have been. I think this might have been just a Dow divergence week, because ES and Nasdaq were sympathetic to each other. Yeah, there we go. Okay, so again, all right. We can see this divergence right in here. It's going to be this low. Okay. So you can see that, right? Whoops.
Yep.
This low is this low right here, and this is Dow and Nasdaq. Okay, now we have the idea and the confirmation that we have a reversal. If we didn't see that SMT, then we wouldn't think there's a full-on reversal coming in, but we see it. So get the SMT with Dow, and now we're saying, okay, we want to move higher. I'm going to do that with that for now, just to keep my chart clean. Now we can look to frame some sort of move back into this range, right? There's two ways you could do this. You could measure like this here, right? And you can see that this move right here tracks, this first deviation tracks into this premium level. So let's look at that. You don't even need the deviation. All you have to do is see this. Each day, what we do is we create a dealing range, and then we engage a discount of the dealing range. Okay, I'm just going to keep that every day so you can clearly see what order flow is doing. Each day we create a dealing range, and then there is a discount entry. Do you guys see that? Discount entry in the dealing range, discount entry in the dealing range. Then now we have Wednesday, Thursday, Tuesday reversal, right? Monday high of the week. This is HRL. This is LRLR. Right? Why is it low resistance liquidity? Well, it's low resistance liquidity because there's large imbalance to fill in discount. So this imbalance right here is in discount. Do you see that? It's majority in discount.
Yeah.
So the weekly range, this move here is in discount. So price is very likely to want to rebalance this. Specifically, as we move from here, this fourth deviation, we're going to want to come back in to a premium of the week, right? The fourth deviation plus the SMT gives us a 50% retracement. Usually, when price reaches terminus, essentially this is terminus daily, right? What do we look for? Daily external goes to what?
Internal.
So you can see we have the fair value gap printed in here, right?
Yes.
So again, everything we're now combining. We're just doing it a bit quicker than usually. I'm not going through each top-down analysis. I'm trying to do it all in this 1 hour chart. So as you can see, we now have a really high confluence draw in liquidity, right? This is the area where price wants to draw into. This is LRLR. Why? Because in here you can see we just have short-term highs, right? Short-term high. I'm going to mark out every short-term high with this blue color. Short-term high. Short-term high. Short-term high. Do you see any intermediate term highs?
Yes.
Not on the sell side of the curve, though, do you?
No, on the buy side I do, but not on the sell side.
Yeah, on the buy side of the curve, what we're doing is we're just creating LRLR runs for higher prices, right?
Yeah, like we create the ranges and then we break them.
Yeah, exactly. So we have these low resistance liquidities. So low resistance liquidity looks like this. Again, right? This is LRLR, and this is exactly what this looks like. LRLR is just failure swings, right? Whereas HRLR is going to be something that looks very different. HRLR is going to be this. Right here. this is HRLR because we have this candle. If I make a projection of this, it looks like this. Right? This is HRLR right in here.
Yes.
None of this is HRLR. As you'll notice, all of this is LRLR. Right? You can see is there any swings that are created and then rated or no?
No.
Right? Do you see how there's a swing created? Do you notice this? There's a swing created here, right? And the swing is rated, right? HRLR or LRLR? Right here.
HR. That's HR because it was rated.
Yeah, because it is a short-term high created, and then a swing, and then a rate of that swing creating an intermediate term high. Intermediate term high is defined by a high with 2 short-term highs on either side of it. We don't create an intermediate term high the entire week, right? So this is a short-term high. I guess we have this right here. Here's your short-term highs. We rate them. This is the first intermediate term high, right?
Yep.
Just this one. Okay, so this is like the only bit of HRLR on the chart that you can see on the hourly. This here, LRLR, 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 right? We create short-term highs again, and then we keep breaking them. We just come into discount of the daily range every day until we reach into a premium array. So now I'm going to get more specific with my dealing range. Once we pass this 50% mark, we want to look for premium arrays. The only premium array I see here is this daily fair value gap, right? Which you can see offers a nice retracement lower. That's why we played shorts on Thursday, remember? Yeah. We had a reaccumulation. This is a market maker sell model internally, right? A higher time frame reaccumulation is a lower time frame market maker model. You'll be able to see it. Do you see it?
Yep.
So that's why we had justification to play short, even if we were in bullish market conditions, because the short setup was still there. And then, as you can see, we keep moving higher into now a deep premium. In a deep premium, I only see one PD array in here, and that's going to be this, right? On the 4-hour, it's also, we can just mark out the 4-hour PD array if you want. This is the 4-hour PD array in here. Right? And then we also have this 4-hour order block. But I like this hourly gap because we're working from a daily context, so I like using hourly structure. Right? We're going from ERL back into IRL, rejecting this low risk entry right here, which is going to be our hourly SIBI. Let's get rid of this. Okay, and then today we have finally our first area of HRLR. So your eye should immediately go to here. Closing above this high is significantly harder than closing above this high, these highs, right?
Yep.
So every time we break above, like on this buy model, what we're doing is we're just doing this. We're creating,
just HR, right?
Yeah, we're just creating structure and then breaking above it, right? It's just this, just really simple, like retracement, expansion, right? All of this is just retracement, expansion. Because if you look on the left side, it's LRLR. Now here is the area where we have HRLR. We have a fair value gap in premium. The rest of these gaps have been in discount or premium.
Those gaps are those are all discount.
All of this shit down here is discount, right? This here is in premium right here, and you can see the reaction we get from it. So we get a mitigation of this premium array, right? Look at the premium array right here.
Yep.
Mitigation, and then we move through it. Now it's been mitigated. I don't expect this to offer any more resistance. So what's the next premium array? Right up here, right? So now we get a mitigation of this array, and this is where a mitigation of the premium array meets a high resistance liquidity, right? Look, that's high resistance. This is low resistance. This is high resistance. Okay? You have to be able to notice that. That's why I didn't expect us to come up into here. ES is different. ES could have come up into here because if you look at the weekly, we tapped a weekly fair value gap. Do you see this?
And that could have nulled the
this weekly fair value gap now means we're going weekly external or weekly internal to weekly external, right? But we have to put in the weekly high first. So look at the 4-hour market maker model, right? Weekly array and then a 4-hour market maker model. And as you can see the delivery, compare the 4-hour charts, you will see just how much more bullish ES was. We didn't even create a 4-hour gap, right?
Yeah.
That's why, because weekly had a nice 4-hour market maker model, and Nasdaq didn't have that. We didn't reach up anywhere near as high. We came above this candle right here on ES. Look at this.
Yeah.
Nasdaq didn't even come above the order block, not even by a single tick. Right? So that's the difference in order flow, is because we had order pairing down here at a weekly array. We didn't have that on Nasdaq. There was no weekly array on Nasdaq. That's why for Nasdaq, I thought ES could really go for this high, but Nasdaq was probably not going to go for this high. I was thinking at worst we'd see something like this in SMT. But I still wanted to cap out the weekly range with an inside bar. Okay, so now today we had our sell-off. Let's specifically examine today's price action, because you guys know every single day I give you guys a review on my Twitter of what I traded in this. So if that's confusing, go look at my Twitter. Every single day there's the trades. Pretty consistent, just looking for hourly and then M5 market maker models, right? Either long or short. In this case, we wanted to play short every day because we had these London moves higher, followed by no manipulation. So we just played these moves every day. Right? It was pretty. Every single day this week we just played this. Because order flow, right? Even if it's bullish, right? Judas profile is an opening play, and we had news. News Judas, right? Here on Wednesday was a little bit of a disgusting day, right? Seek and destroy. Because no news, right? But then here, really clean news Judas, really clean news Judas, or in this case, reversal. And same with Tuesday, right? Tuesday was a classic continuation for ourselves, right? Came up into an OTE breaker. You can see it right here. Right, London high of this is a classic protraction. Do you see that? Tokyo establishes a range. London raids the Tokyo, expands lower. New York trades up into what? This OTE breaker. Breaker, fair value gap, lower. So the whole week here was a pretty nice move until today, where we had this price action. So let's take a look at what that was. So in the morning we came in. Let's look at our hourly chart. You can see we engaged this SIBI, and again, what am I looking for? Right now, all I've seen is bullish price action. So if I want to see some form of reversal, if I'm framing a reversal trade, not just a retracement, I want to see some form of SMT. So another thing we can do is do you see this wick right here?
Yep.
I'm going to use this wick and project this. Just keep these projections here, because smart money positions themselves inside of wicks, as we know, right? So we came up into this third deviation between 3 and 4 of this wick, which is essentially just the exact same thing as me saying this. Me projecting the wick is just me also projecting this first distribution leg, right? You see how it lines up with the 2?
Yeah. Oh shit! Yeah. Yep.
So this wick is where smart money is positioning themselves in our weekly reversal profile, right? From external back into internal. So once we engage this hourly SIBI, what I'm looking for is a SMT to qualify some sort of trade.
New price.
Yeah. No SMT. It's not a high probability trade. As you can see, we get the SMT, right? Look at this high and this high, right? Small, but still there. You also see it right here, too.
Yeah, that one's big.
This side.
Yeah, right.
And this side, right? But the SMT that I played was this hourly one, and you have to zoom in to see it. So let's make this way smaller, and let's look at it like that. Do you see how this hourly candle is higher? Go to the 50-minute chart.
Can you point out the candle again? I lost it.
Okay. Look at this candle right here, okay?
Yep.
These two candles. So here's a swing. All right. This candle takes out this high. Right?
Yeah.
It's a tiny I think you can see it better on the hourly.
I mean, on the hourly though, you wouldn't need to look like that small, right? You could just look at the giant swing from Monday and the other one, right?
Yeah, of course.
Yeah. Okay. That one made more sense to me than looking for that tiny 5-minute one.
Yeah. Right. You can also see the SMT here. Right, in this giant swing.
Yeah.
There's this one comes all the way up into this, so it's like a 15-minute. You can see it right here. I'm just trying to pick a swing high. But yeah, there is an SMT at the highs. But there was one on the hourly too. You guys can see this, right? Like this candle here is lower than this candle right here. You guys see that?
Oh yeah, yeah, it's clear.
Yeah. Here.
Yeah.
It's pretty clear.
That's the reversal SMT right there, right? It's a 15-minute SMT. Right?
Yeah.
Right there.
Yes.
Lower.
Yeah.
Higher. Okay? 15-minute SMT. Make sense?
Yep.
Tiny one, but still valid. Like, SMT qualifies an SMR. You'll see that. Like, I'm not just saying that. Like, that's something I looked for, right? Like, if I need to see that in order to get short before the news. Look.
Yeah, but time was aligned with price over there because that's a 4-hour SMT as well. It just happened at 6 a.m. So.
Yeah. See, this is the SMT at the hourly highs. Yeah, it's a 4-hour SMT as well. Yeah. Right, and also we're inside this gap. So seeing this made me want to, or made me allowed to go short based on my model, because I can't frame a reversal without the SMT. Okay, so we have the SMT there, and then again we have a really classic protraction profile, right, for a Judas swing. Or if you're bullish, it's a Judas swing. If you're bearish, it's a late London protraction. In reality, this is a late London protraction. Doesn't matter what you're calling it. We have LRLR and HRLR with the SMT. So we position ourselves before news, right? We get our hourly SIBI. Our daily interest is lower. That's the working expectation. So daily lower, hourly SIBI, SMT, 5-minute market structure shift, 15-minute gap right in here. Small one. You guys see that?
Yep.
And then not only just a 50-minute gap, there's also a 5-minute gap that overlaps it. Right? 5-minute gap. Position yourself before the news. When was news? Right here, 8 a.m. Here's your entry. Like we had, right? Stop, cover the high, TP, Asian lows. And we also had a confluence of a target, right, based on our hourly model, right? Hourly is our intermediate time frame, right? M5 is a lower time frame. We had this. Where is it? Whoops. This candle right here is the devil's mark, right? It's a candle without a wick. So you can see we manipulate higher in this current power of 3. Really clear power of 3. Accumulation, manipulation, distribution. Couldn't be more clear. All right, that's the current daily power of 3 move. That's why you can see this candle has no wick. Right at the midnight open, right? Midnight open expands. Okay, so that's a good target. And then we want to position ourselves. Also in this move right here, you can see the second standard deviation lines up almost directly with our low-hanging fruits. Right. So this is a really good short scalp based on the 5-minute market maker model, which you see right here, which is where I took off all my contracts, just right below these Tokyo lows. I didn't expect to see this. No way you could have known that.
No way.
Now,
No way we could have seen that.
Yeah. Now we can employ a look back function to look at our daily range. If that doesn't make sense, then again, go back to the IDPA look back lesson. So we want to look at, if we're on the 5-minute chart, what's the synchronization?
An hour.
No, how many,
hour.
what do I look back?
Oh,
3, 4 hour.
1, 2, 3. So if it's 3 hours.
I look
If
back
it's 5
3
minutes?
4-hour candles, okay?
3. Wait, you said 5 minute?
Yeah, 5-minute is 3 4-hour candles.
The 5 minutes, 3 4
Yeah,
hours.
same with 15. 15 and 5 is 3 4-hour candles, okay? That doesn't make sense. Go into here.
Oh, I see it. I have it in my notes. I confuse it with the other time frame in mind. Okay, I got it.
Where is it?
I sent it in the one-on-one, the data ranges. I have it in there in our one-on-one.
You said like 1 minute and 5 minutes.
Here,
4
it's
hour
right.
candles.
It's right here. It's right here, just for everyone in the recording to see. If you go into here, it's this PDF I made for you guys. Okay. I don't know why. What the hell? Okay, daily, you want to look back 20, 40, 60. Hourly, you want to look back 3 days. M1, M5, 3 4-hour candles, right? That's your look back synchronization. You should know that. And if you don't know that, you should study the resources. Core content. So you want to look back 3 4-hour candles, right? So I'm going to look back 1, 2, 3, okay? This is the notable swing low in that 4-hour range. Fantastic. I'm gonna go back to my 5 minute. Again, the candles you're projecting here, right, are gonna be, let's look at each 4-hour candle open and mark it out. All right, so here is 6 p.m., 10 p.m., 2 a.m. In this range, we form a notable swing low. You could choose either one of it. By the way, if you want, you can choose this high and this low, or you can choose this high and this low. I don't care which one you choose. If you've seen the 4-hour, right, this is a swing low that's notable and prominent, right, that puts in the high. Go to the 5 minute chart. The high of this entire expansion is put in by this 4-hour low, okay? What's this 4-hour low aligned to? The 2 a.m. candle, right? Again, this is the 2 a.m. candle right in here, right? The low of that candle, the low of that swing, not that candle, of that 2 a.m. is here. Now you could use that low, or you could use this low, which aligns to the third candle, which is going to be this 6 p.m. candle. Either or valid. It's up to you. This is valid, right? And this is valid. You could say this is the last leg higher, right, of that 4-hour. And then you're going to get, 2 to 2.5 reversal conditions. But for me, I just like using this because this is the obvious this is the obvious range expansion that frames our power of 3. If this is accumulation right in here, right? So this is A. Again, this is about context. Like, there's not rules here. So this is A, this is M, and this is D. You have to look at what you're actually doing in each of these delivery states. This accumulation has a purge of this low. Do you see that?
Yep.
Let's also look at our ES chart because we want to be looking at SMTs. Do you see?
Yeah.
In here.
Yeah.
Fuck. It's kind of annoying to do this like that. Okay. Let's see if we get any SMT. Ooh, almost. That would have been even nicer if we got an SMT right in here. Then it would have made even more sense to use that low. We didn't actually get the SMT in here. But we get the SMT at the highs. So this leg is obviously the manipulation leg. And this here is what I use for my Tokyo or my Asian session manipulation. You guys, it's clearly obvious this is the manipulation of the Asian range, right?
Yeah.
Okay, so then this is the low I want to use for the 4-hour projection, but it's also the low I want to use for this, okay? So 3 to 4, this region here is where I'm looking for reversals. I'm going to add in my 3.5 just to see what it gives me. Okay, so I'm looking for reversal somewhere in this region. Every box I draw in blue is just going to be a standard deviation box I'm interested in. Right, this is the manipulation of the Tokyo range, very, very obvious manipulation of the Tokyo range in this AMD. Now we have this 4-hour manipulation lower, right here, and then we have our distribution. So as you can see, let me get rid of these boxes. You can see it. Price comes into our reversal area, forms the SMT inside of here. This is a good candidate now for shorts. This is the projection I would use for the intraday profile. Right? This leg higher is the manipulation. Sure, this is the short-term manipulation right in here. Like if you want to use a short-term target, like a short-term market maker model, you use this. All right, here's your targets. All right, this 4th deviation aligns super nicely with this Asian low. Fantastic. But that's not the intraday manipulation. That's just the most recent manipulation. The intraday manipulation is all the way from this low to this high. That's what's manipulating the daily range. So once we get that, we come into this. What is this 1 to 1.5 region? What is it defined
Silver
as from our
bullet
standard
zone
deviation lesson?
reaccumulation.
This is the reaccumulation area, right?
Yep.
Okay, so we look for an SMT. Did we get one at this low?
That low. Which is it? Which low is that? What time was it? 3:15. Is that the 3:15 low?
Yeah, 10 a.m. candle low.
Yeah,
Today.
3:15.
Again, SMT frames SMR, so we don't look for any SMRs without an SMT. As always, we need to see an SMT. Yeah, I see an SMT right here. Do you see ES not take out this low? Previous day low, right?
Yeah.
You're saying yes, but do you actually see it?
I'm looking on my chart.
Previous day lows. Everyone see that. ES does not take out
Yeah.
previous day low.
Yeah.
Yeah.
That was today. Yeah.
Everyone say yes.
That was it.
Yes.
Okay, SMT frames the SMR. Fantastic. Inside the reaccumulation zone of this 4-hour move. Makes sense. Look at where price reaccumulates. Do you see the bodies holding? So again, I'm going to put a blue box on our areas of interest. I want to pay attention to this area of interest. Where does the 10 a.m. candle open? The 10 a.m. candle opens inside this zone, right? Forming an SMT with this low. Where's the Wednesday low?
Right there.
Here. Okay, so now we have a narrative. This is our narrative. We have a likely reaccumulation zone, and this 4-hour candle opens inside this accumulation zone after sweeping liquidity. Are we going higher or lower? Most likely. Our expectation is an inside bar day, right? So we go from external, and we also, you see how we break 4-hour structure? Right here.
Yeah.
Okay,
Yes.
so external goes to what?
Internal.
So now we can, without knowing anything else, you can now frame external to internal, right? Market structure shift, right? Close below, external range, close back into the range, and go internal.
You'd have to wait for the 2 p.m. candle for that, right?
Yeah, no, but you know there's a
Yeah,
retracement
yeah.
likely to happen because we're in
Yeah.
a reaccumulation zone. We form an SMT, right? And then we get lower time frame structure. So let's say you're looking at just the hourly and 5-minute, like our model is, right? Okay, let's look at the 5-minute. We now start to displace above, like what's this? Market structure shift, right?
Yeah.
Okay, so now we have a model that's formed here. We have this daily low has been taken, right? With an SMT. Or this 4-hour low, rather. Right?
Yeah. Hold on, I'm looking. Uh-huh.
Okay. Now we're closing back into the range. Now we're expecting some sort of internal move, right? We're expecting some sort of internal move. What we want to do is we want to recognize that price will go from premium now to from discount back into premium. So even if we're just looking at the hourly, see how we create this hourly fair value gap?
Yeah.
Okay, so
Yeah.
I mean, again, look how price. You can just trade the hourly chart. You don't need the 4-hour chart. Look at the hourly gap. Right? To see how price holds the gap. Now, there's more that meets the eye than just this 1-hour gap. But if you were just trading the hourly chart, would you have made money on this trade? Yeah. Right? Say you don't even use different time frames. You just short premium of the gap, right? You short the CE of the gap, like here. Stop above this candle.
Yep.
Target below this candle. 2 to 1R. Right? Now you get to benefit from using different time frames to get better entries. So we're coming back into this gap after breaking structure on the hourly. You see where we're breaking this structure right here?
Yeah.
Okay, external. We put in the SMT. Let's look at the SMT again.
And we shorted, like in hindsight, we shorted. You were looking for longs just because ES was stronger that like at that point in time, right?
We also want. I said I don't want to. Remember, I said I don't want to short in discount.
Yeah.
Remember, I said look at the dealing range. Remember the dealing range. Now we have that's the daily dealing range. Let's also look at this dealing range. I said I don't want to short below here. Remember I said that to you?
Yes. Yeah, I remember that shit.
Yeah, cause I never short in premium if I can avoid it on my intermediate, especially on my intermediate time frame, right? On my lower time frame, sure, whatever, but on my intermediate time frame, I can now see. Look, 1 to 1.5 is a reaccumulation zone, right? We're closing back within it. We're forming an SMT inside this 4-hour fair value gap. Do you see that? There's a higher time frame array right here. It's not, again, remember there has to be a higher time frame array that you're basing a reversal off of, right? Higher time frame array. You can use the hourly gap if you want, the 4-hour, whatever you want to use, right? Higher time frame array, and now you're seeing a reaccumulation. Now look at this SMT chart. Right, this low right here at 10 a.m. It's not that. Where is the SMT? Is it this one? Yeah, it's this one. Do you see that SMT at the previous day low? This is Thursday's low, right?
Yeah.
Okay.
S&P
ES takes it. And NASDAQ takes it.
Exactly, yeah.
Right? NASDAQ takes it. ES does not take it.
Yeah.
Okay? Same candles, right? I'm using the 15-minute chart here. 15-minute chart is right here, this candle, okay? Lower.
Yep.
Higher. This is an SMT, right? You guys see that?
Yes.
Inside a 4-hour fair value gap. Inside a reaccumulation zone. Okay? So now I'm looking for an internal move on the hourly. Just because we're not moving. Are we moving lower at this 10 a.m. open?
No, we're moving up.
No. Right? In the same way that we could use that same logic when we opened up at 8. Remember what I said? News. If news is already manipulated, right, it will distribute, correct? So news manipulated here, right? So we distributed. And you can see where do we reaccumulate with news?
Between the one.
This is the this is the SMT, right? Right here.
Yeah.
Okay. So you have to remember why you're picking certain levels. It's not like hindsight. This forms the SMT right in here. Okay?
Yeah.
Look where we're reaccumulating. Where's the gap where you're taking your entry in? Right here. Where does 830 open up after reaccumulating, after manipulating? Is 830 going to come higher?
No.
No, it's going to distribute, right?
Yeah.
Okay, now look at the larger power of 3 move. You don't even have to think about it like power of 3. Look at the larger move at hand. Now we distribute down to these lows, forming another SMT, just like we did up here, right? What's the zone we're in?
115.
Are we displacing below this low?
No.
So even if you want to hold your shorts, when does your short become invalidated? When we get a SISD and a market structure shift, and we get this breaker entry on the 5-minute, right? Like you said.
Yeah.
Right, this is a unicorn entry right here. This right here is where you're invalidated on shorts, at least in the short term. You don't have to long it, because we have a new fair value gap that's printed on the hourly, right? But just from this here to this fair value gap is 40 points, believe it or not. That's an external to internal play. Look at the hourly. External range liquidity. I'm going to mark it out. It's your market structure shift. To make it a different color. Okay? You see how you have a market structure shift right here? On the hourly?
Yeah.
Yes or no? Do you actually see that or no?
Yes.
I'm trying to look on my chart. I'm not really on the hourly. Yeah, I see that one.
Okay, so what does external go to?
Internal.
So does external just keep expanding lower? If we form an SMT inside a reaccumulation zone.
No.
Inside a higher time frame PDO.
It has to be traced first, yeah.
Yeah, right? So and we're in a 4-hour fair value gap. We're in a 4-hour fair value gap, a market structure shift, and we've hit external. What's likely to happen?
Internal.
Yeah. right? External to, again, the basics, external to internal, internal to external, right? So the hourly gives you a 40-point setup just from here to go into this fair value gap. This is relatively low risk. Yusuf, didn't you take this?
Which one? Yeah.
This like something around like one of these trades right in here.
Yeah, but I was like, I went on the fucking 1 minute. I didn't take him on the 5.
Yeah. Okay. So then there's the 5-minute entry long, and again, you want to be targeting right a premium of this dealing range. So I'm going to mark out premium.
Yeah.
Here is where you want to be looking, to mitigate your longs and maybe potentially flip short. Look how weak price gets above this area. You see that?
Yep.
Okay. What do we also form right here? I don't even need to look. I already know it. There's an
Roll SMT.
Yeah. Okay, so now, again, what did I say? You don't look for trades or reversals without SMTs. Reversals or retracements have SMTs, right? If not, you're just trading accumulation. Just remember that. Without an SMT, it's an accumulation of sorts, okay? Now, here's where you can, again, use more power of 3 logic. So where we form an SMT, right? Here's a 50-minute chart. So ES comes all the way up and takes out this side. You see that? And forms a 3 drives pattern, right? You see that 3 drives pattern like that?
Mm-hmm.
Okay. So we're creating high resistance liquidity, right?
Yeah.
Okay. NASDAQ doesn't even come close to this high. Massive SMT, right?
Yeah.
Okay.
Yeah.
Fantastic. So once you form an SMT, you can now say, now I want to be looking to mitigate my shorts or mitigate my longs somewhere above here. You see that SMT form, and now you wait for the hourly model or the 5-minute model to print if you want to go back short, right? So in here, I actually traded long because I was looking for this. Again, this is the level that gave us the SMT. So this is the level we want to project. You can use this first accumulation leg or this first distribution leg. Look at where price tops out.
That's 3.
1.5.
Yeah, 1 to 1.5, right, in this region?
Yep.
Now, I actually like using this more. So you see how this 4-hour candle opens up with this wick?
Yeah.
Smart money is active in the wicks. You got to remember that, right? Smart money is involved in order flow in the wicks. You've heard that before, right? ISG says that?
Yeah.
This is where they accumulate their orders, in these wicks. So wicks wicks by definition are manipulation then, right? So I like to project this wick. Let's use background so we can see the levels better. Let me bring it closer so we can see it. So smart money is active in this wick. Look at where price tops out. Right? You guys see that?
Yep.
2.5 almost to a tick, right?
Yep.
Because this is where they accumulated their orders for offset distribution. From what? 4-hour external, right? Again, same thing we just had the conversation about on the hourly. Now we're going to do it. Actually, I'm going to keep this blue box and just get rid of this. Okay, that blue box is the 2 to 2.5 of this wick. Okay, makes sense? Do you see how the 4-hour goes from, what is this right here? Market structure shift?
Yeah.
See how we print this 4-hour fair value gap?
Yeah.
I'll move this, change it from there to this. Okay. This is our 4-hour SIBI now. So smart money is very active in this wick order pairing on the 4-hour from external range to what?
Internal.
Okay, look at the 5-minute chart again. Do you see how the reason why I took this long here in a premium, relative premium, this long right here?
Yeah.
Right, you can watch the execution video, or you can just look at the recap I posted on Twitter with the actual end. Yeah, here, there we go. The reason why I took this long in premium is because I am anticipating a 4-hour IRL move. So the TP here on the hourly ERL is the creation of a 4-hour gap at 2 p.m. Now that is more complex than that might make sense to you right now, but you have to recognize I'm anticipating price to want to come back into this H4 civvy. So do you see how we leave this here as a wick and then we move away from it? Right? Look at the 5-minute chart. We print where the 4 hour is going to form, and then we move away from it, right? Look at what time this is at, 1:20, right? From 12 o'clock to 1:20. We move away from the 4-hour gap that has been printed. In my mind, I already now see that this high is going to print the gap. Look at the hourly chart, right? So the hourly has come back in and mitigated this inefficiency.
Mm-hmm.
We now, in that time, created in the next hour, we're going to create a 4-hour gap, right? So in my mind, I'm saying price went external here, and the 2 p.m. power of 3 move now looks like it wants to be this manipulation right here. Do you see this? Accumulation, accumulation, manipulation, distribution. Do you see that?
Yep.
So for me, that's why I traded long here, and that also forms our SMT, which we hadn't seen yet. Okay? We hadn't seen the SMT to give us a reversal sign. So trading short here, would that make sense? To me, it didn't, because we didn't have the SMT yet that I wanted to see. We had it right here, I guess. Actually, we did have SMT. But we didn't have it aligned with time, okay? The 2 p.m. candle open is when I wanted, the 4-hour candle open is when I wanted to short, okay? Not in here. In this chop, this looks like LR generation, and then we can run against it in order pair, right? So this long in here was definitely risky, but you can see, even if you went short, you would be invalidated in your short as soon as you saw this inverse fair value gap, right?
Yeah.
This is where I actually went long, right, in this wick. Yeah, right, target, look. Look, I say inversion in 2 minutes. And then we're expecting the inverse to form because there's a power of 3 move here. Again, we're in this retracement area, which I'll show you in a second. And look, you want to add as soon as the inverse is activated. Right? And then you're going to hold. And I'm going to show you what the devil's mark was and show you why there was more confluence here. So price wanted to come reach up into this external range. It was a full 5-minute market maker model. If you look on the hourly chart, right? What do we have in here?
Internal, external.
Yeah. Do you see how all these moves are fractal? So what's the 4-hour doing? External to what?
External to internal. And
What's the hourly doing?
From internal to external.
Yeah. Do you see how the hourly is going like this?
That's cool as hell.
Right? Internal to external. And the 4-hour is doing what? External to internal.
Opposite, yeah.
So look, both models are supporting this move into this area. Right? Swing high on the hourly, 4-hour gap. That's why I knew this inversion would be created on the 5-minute. Because we came into this hourly gap, right? You can see we came into the hourly gap. I'm going to make a different color. And then we started displacing higher, right? Boom. Once we close through here, now I know we're going to come in, re-tag the internal on the 4-hour, sweep out the hourly high, because it's a 5-minute market maker model, right? Hourly external to hourly internal, internal to external, right?
Yeah.
It's a perfect market maker model. You can see it, right? You don't have to know all of this other shit. You can just say, like, oh, like, it's internal to external. This other shit just gives you confluences. Okay? And then again, if you want to use power of 3 concepts here, which you don't need to, right? Let's look at our ES 5-minute chart. So we have an SMT right here, right, currently? On this reversal, on this retracement lower?
Yes.
Okay,
Yeah.
fantastic.
Yeah.
And we're looking for that internal move so we can use this manipulation kind of here, because this high created the SMT. Again, where are we? What's the low? Again, why am I using this high? What did I just remember? This high in here. Do you see how this specific high or this specific high, right, forms the SMT with this high?
Yeah.
Again, that's where I anchor my power of 3 moves around. I'm looking for SMT, so you could use this one, right, like that, right? Or you could use the first distribution leg, which for me makes a lot more sense, right? Because we're putting in a failure swing here, but I actually like this one more. Again, the rules, like, it doesn't matter which one you use. You can use this to this, you can use this to this, right? Or you can use this to this. I like this one more because it's a failure swing. We're failing to run this high, creating what? LR. Yep, and then we're displacing lower. What are we doing at the 1.5? Look at that.
Reversing or accumulating, reversing.
Yeah, reversing. Retrace. So this is a retracement model.
Yeah.
Look at the low of the day. Right? Lines up with here. So what is this power of 3 move? Accumulation, manipulation, distribution, and then reversal. A, M, D, X. Do you guys see that? This move
so
right
on the
here.
hourly, that's an accumulation. That's AMD. But then on the 4 hour, it's AMD with the manipulation being into the
And then
4 hour
this is
city,
the
right?
X.
And then that's the distribution
Yes.
for the 4 hour.
A-
the one that you described.
Yeah.
That's
A,
the hourly.
M, D, X.
AMD. Okay, AMDX the reversal continuation. X is the
Right?
continuation
Yeah.
of
So
reversal.
this,
Understood.
and then again, this price leg here is framing this entire AMDX. This one or this one, whatever you want to use. Right? Now this is more complicated than you needs to be. You can just say, wait for market maker models, wait for my conditions, right? On the hourly chart, here's my entry, right? Are you going to go short into an hourly BISI? That's the question I have for you.
Fuck no.
So even though you got a market structure shift right here, this is in an hourly BISI, right? Are you going to short this fair value gap in here without any other confirmation?
No.
Right? Because the more recently created gap is the bullish one, right? Look at time. Time over price, right? Remember, time over price. So what's the most recent hourly created gap? This one or this one?
The BISI, the
Yeah.
H1 BISI.
So I wouldn't just short into this hourly gap. I'd actually look for reversals out of here, right?
Yeah.
Okay, so then we get that move. Again, remember we had that 4 hour wick that we're looking for to be a level of reversal as well. So we're looking for this. Recognizing that smart money is positioning themselves within this wick right here. So you're looking for this region to be our reversal region. And we can see we have a reaccumulation. Look, where is this hourly fair value gap? It's between-
1.5.
Like it literally prints right at 1 to 1.5, right? Look at it.
Yep.
Okay, so that's where it's reaccumulating, and then we redistribute, and then all hell breaks loose, and the shorts get 200 points more, right? This is what the trade Willie took.
That's a fucking ripper, man.
Yeah. So then once we come up here, right, we're distributing above this high. Now we have hourly external taken. External goes into what?
External goes to internal.
Yeah, and well in this case we're having this.
Internal, yeah. For the 4 hour, you go
Yeah,
internal
for the-
to external.
Yeah, exactly. For the 4 hour, we're going from internal back down to external. Look at that. This is just waiting on time to create this 4 hour gap. All of the shit you're seeing in here was just the waiting on time to create this gap. Remember time and price? We hadn't have enough time yet, so we just chop around until this gap's created so we can reverse. It's not going to reverse from here, is what you have to recognize. Because the 4 hour gap just printed, right? So it wants to come engage that because we had a 4 hour market structure shift, right? External to internal to external. So there's a whole today was like a very, very interesting price delivery day to say the least. Again, the last confluence I had for my longs was this. When I see price open up this distribution, right, or manipulation, so you see how we have this 15-minute gap right here, right?
Yeah.
It overlaps this hourly gap. Look how this 15-minute candle opened. No wick, right?
Yep.
So that's my devil's mark. Then I
So
can
it's
go.
engineered for it, basically.
Yeah, exactly. I can go down to my lower time frames and I can see what the internal dynamics are. Look at this. That devil's mark creates a full market maker model that I can play on the 30-second, which I did. And then also that's associated with the 5-minute move. But just that 15, right, is low-hanging fruit, right? And that's why we partial there. Right? Devil's mark, that's the retracement on the 30-second. So now you have different time frames. A 15-minute PD array, right? 1 minute intermediate time frame and then 30-second lower time frame if you really want it, or you can just stick with the 1 minute. But as you can see, we have an SMT down here, and the exact same thing happens again, right? Look at where price tops out.
Yep.
Right? So it's all these moves are just, they're built. One SMT leads to the next move. An SMT frames the SMR, whether it's a reversible, retracement, expansion, or not consolidation. We don't play consolidations. But it's all happening in different time frames. And that's why today's a good thing to journal. Like, all the price action is good to journal today because you're seeing all of these different phenomena in play. Right?
Yeah.
Like, look, devil's mark opens up into this area of manipulation. You can see it, AMDX, right? AMDX. So then we want to play this distribution, and you can play the reversal as well. Another example here would be, look at YM today. Okay? What do you see right here?
Devil's mark.
Look at the hourly candle. What do you see right here?
LR.
Look.
Looks like LR.
Look at this
probably
4-hour candle open at Tokyo.
Yeah.
Immediately starts the what? Right? Manipulation lower into what?
High time frame PD array.
Yeah, 4-hour fair value gap. Right?
Uh-huh.
So let's make this green. So now we have this devil's mark here at 8:30, and this one on the 4-hour, as you can see, and on the hourly too, right? We have no wick in both of these candles right here. The immediate manipulation lower. That's the target because we're going to come back in the current power of 3 move and print this wick. This wick is going to be reprinted in the current power of 3 move. So then YM comes all the way back up, prints the wick, and then distributes all the way back down. And we can see that because we come into this 4-hour fair value gap. We form an SMT. We form equal highs. You see this? Equal highs.
Yeah.
Right? Like, it's all it is priming this move back into here. And it's building a whole bunch of LR. Equal highs, equal highs. So once you start to see these things, you'll realize, okay, like there's always these AMD moves. Again, where does smart money position themselves?
In the wicks.
Right? So look at this 10 a.m. candle open. Again, we'll do the exact same thing. So let's see what happens. Okay. 4 is what? When you have the right PD array and you have context, so we have SMT and a PD array here, what is 4 likely going to be?
Soup.
Turtle soup area, right?
Yeah.
Okay.
The soup area.
So that's the move. This is the distribution. You can see it. Do you see the last leg before news manipulates lower?
Yeah.
Okay.
Yeah.
Again, you can use your look backs as well, right? For 3 4-hour candles. If I'm looking right here for 8:30 opening, 1, 2, 3. Well, the most obvious manipulation is in this candle. You can see it, right? Look. Do I need to look back any other candles, or can I see the manipulation in this 4-hour candle right here?
You can see
We're on the 5-minute chart, right? And we're going into news. We're trying to frame the daily projection. Remember on NASDAQ, we looked back to this range in here, right? Here, you can clearly see the manipulation is this 4-hour candle right here. Because it takes out this high, right?
Yep.
Okay, so go down in time frame. What does that look like? It's just this manipulation, this one right in here. Okay. turtle soup at the 4th. Now smart money's positioning themselves where? Inside the wick. That's where they're getting their fills. So you can use this wick as a distribution target. Let's extend the lines. Holy shit. I'm gonna not do that. Look. See how price comes all the way back up into this 4th deviation?
Yes.
This is the wick. This is the 10 a.m. wick. Right? So no matter how you like to draw your deviations, because you can draw it like this, right? You see how 1.5 is the high of the day?
Uh-huh.
Whatever confluences you need to draw your deviations, it doesn't matter. I'm just saying this is where smart money got involved, right? In this wick. On the 4 hour. Let me draw it out again. So that's the deviation protection I wouldn't mind using, and I can see all of my reaccumulation zones, right? Look at 1 to 1.5. See price come back in and reaccumulate here?
Yep.
Right? So whatever you want to use for your confluences, it doesn't really matter because all your framing is internal to external. Okay, that was a lot of sidetracking fuckery. But does anyone have any questions about today's price action? It was very interesting, to say the least.
That was amazing.
There's a lot of different shit going on in today's price action. Like
You're gonna post this part too, right? Like all this review?
Yeah.
You should.
Yeah.
I think you should, yeah.
Okay. Back into the lesson. Okay. IDPA market cycles. We're going to focus on consolidations and expansions. Reversal and retracements are just a form of expansion. So expansion can lead to reversal, consolidation, or retracement. Let's see what that looks like. Tangibly speaking, that means if you have a move from... I'm just going to draw out these two boxes, okay? This is going to be 2 higher time frame PD arrays. You know, I'll do it like this. Let's say this is a daily chart, right? And this is our ERL and this is our IRL, okay? So what does the market move from?
ERL to IRL, or IRL to ERL.
So say this is our market maker model, right? Back up.
Yep.
Just like it was today. The market is going to leave a consolidation above or below a higher time frame PD array. Then is going to break away and look something like this. Every single move in the market is going to look something like this. So the market is either consolidating or it's expanding towards old consolidations. On an expansion towards old consolidations, you'll see the market will retrace and then consolidate often. So let's mark out each phase. What is this right here?
Original consolidation.
So it's out of these 4 words, what is it?
It's consolidation.
So what can consolidation lead to?
Expansion.
Or reversal.
No
Consolidation must always lead into an expansion, right?
Yeah, you can't reverse.
Consolidations cannot reverse. Whoops, the wrong way.
Got it.
Consolidations expand. As you'll notice, a smart money reversal will happen somewhere up here. Or somewhere down here. Right? Like this consolidation, right? This original consolidation isn't a reversal in the market. You'll see that price is doing this beforehand. Okay? This is a time-based array, remember, right? Daily fair value gap, right? We're consolidating to create the gap. Does that make sense to you guys? Who's been at the lives and I've talked about this? I know Yusuf has. How we consolidate in time, not price, to create gaps or inefficiencies? Does that make sense, that concept?
Yeah.
I want to hear more. Jimmy, does that make sense?
I'm trying to visualize that.
Let me show you. Let me show you on like a... Okay. Okay. Do you see this hourly? Okay, we're gonna do it from the bottom up, so I can show you. Like, I don't need to see the higher time frame chart. What do you see right here? A consolidation or an expansion?
Consolidation.
I can tell you without a doubt, I'll bet you $5,000. Right here, there is a higher time frame PD array on the daily. This is going to be IRL or ERL. Do you want to bet? Who wants to bet me?
I would not bet you.
It's gonna be
Jim.
ERL, wouldn't it?
Who wants to bet me?
Jimmy got it. Come on, Jimmy.
Do you see the PD array in here? Ready?
Yeah.
Okay, how did I know that? I didn't look at the daily chart. How did I know that? Because all I need to see is a consolidation on the intermediate time frame. You think that's cherry picked? Watch, I'll do it a million times, and you will too after this lesson. You'll realize there's only two primary functions of a market: consolidation and expansion. So look.
Yep.
What do you see in here?
Consolidation.
Yep.
What rests below this consolidation, therefore?
Higher time frame PD array. Go to the 4 hour. Because I don't think we could see it from there.
There you go.
There you go. Is
Order
it inverse
block,
too?
propulsion block, immediate, or RDRB, whatever you want to call it.
Support natural. Does it support natural
Yeah.
count or has to be?
Be like
Yes,
simple
yes,
PD
of course.
array.
Look at that, support natural. But let's stick to our time frames that we like. Let's use the hourly and the daily. That one wasn't as clear. Here's a nice one. What do you see right here? Consolidation or expansion?
It's consolidation.
What rests above this?
Above that?
Yep.
Stops. Oh, above that? If we're selling out, then there should be a higher time frame PD array.
On what time frame?
Daily, because this is hourly.
Yeah.
What rests above that?
Or block.
ERL. ERL or IRL.
ERL,
in this
right?
case.
You guys see that?
ERL.
ERL?
Yep.
Swing high.
Yep.
Why? You
Yep.
see how we're consolidating below a swing high? The market can't go from... What did I just say? The market can't go from consolidation to reversal, right? Reversal happened in here. What is this? Consolidation? Expansion. Okay, again, it's all going to make sense in about 30 minutes. Okay. What do you guys see? Let's just pick different time frames. I'm showing I'm not cherry picking it. What do you see right here? Consolidation or expansion?
That consolidation.
Resting
Yes.
below this consolidation is a weekly PD array.
You hit the month.
Oh, there, that's why. Oh, look at that.
Ah.
Right?
Yep.
Fair value gap. Order block. Okay, let's find another 4-hour consolidation. Is this consolidating or expanding, guys?
Consolidating.
What rests below here?
Weekly PD array. IRL. Weekly IRL. Or ERL. IRL.
Yeah, right there. Let's see it.
Okay. Let's see what else. Is this in here consolidating or expanding?
Consolidating.
Is this all-time highs? It's not, is it? It might
It's
be.
not.
I don't want to pick all-time highs because that would be
Oh, I
hard.
think it is. It is. It is. It is.
Okay, because they're not going to be anything to the left. So, is this consolidating or expanding?
Consol.
So what's above here?
PD rank.
IRL or ERL.
On what time frame?
Weekly.
I'm going to look left. There's no way I could know, right? I'm going to look left. I'm just going to drag this box out and look left. How could I have known?
He's a wizard.
Do you see what I mean? You don't need to see the weekly chart, do you?
No.
Above a consolidation will rest a higher time frame PD array. Let's go 5-minute and hourly, so we can get lots of signals. Find me a consolidation. Is this consolidating or expanding, guys?
Consolidating.
What rests below here?
ERL.
Hourly PD array, right?
Bang. Yep.
Let's find another. Okay, let's find an hourly PD array and then look for a consolidation resting above it. How about that? Do you see this hourly PD array?
Yeah.
Let's look at the 5-minute and find a consolidation resting above it.
It's back. Yeah.
There it is.
Bang.
Right here.
And then that should be targeted on the south side, right?
Yep. Let's go 15 minute and 4 hour. Let me find a really nice. Oh, perfect. Is price consolidating or expanding?
Consolidating.
Okay, so what rests above here?
5
4
Red
hour
Red
PDRA.
4 hour PDRA, right? Swing high. Right? Do you see the swing high?
Yep.
Look left.
And the consolidation that happens above or below the ERL or IRL, that's a target for the opposite side of the leg, right?
Yes,
The
of
curve, I mean?
course. Yes.
Okay.
Because the member. Okay, we'll do one more and then we'll go back to lesson. So let's go back to 15. Let's find a consolidation for us. Let's go something less recent so you guys don't remember. This is nice. Oops. What's price doing?
Consolidating.
Yep.
What rests below it?
Yeah.
4 hour PDRA.
Yep.
Okay. So there's no way we could know these things, right? We're just looking for consolidations, right?
Yep.
So now we're going to tie that back to market cycles. Consolidations are the time-based proportion, right? Portion of a fair value gap being created or a swing high being put into the market. Above old PDRAs, ERL or IRL, will rest original consolidations. Those will be the target for expansions. So in your notes, you should write down this. This is something ICT doesn't teach you. This is what ICT should teach you, but he doesn't. The market is either consolidating, expanding towards old consolidations, resting above or below old consolidations, is a higher time frame PDRA. I.E. M5 consol, H1 PDRA. M15 consol, H4 PDRA. H1 consol, daily PDRA.
Yeah.
Put this in your notes, guys. This is the stuff you need to know. This is stuff that you need to know to understand how the market works, because this is how the market works. Okay.
Yep.
Now, we now know the market is either consolidating or expanding. Market maker models will determine which side of which consolidations we are expanding towards. Okay? Market maker models will determine which consolidations we are expanding towards. Therefore, we can say this statement when we are considering the market. A smart money reversal at a higher time frame, PDRA, will cause a market maker X model to form on the intermediate term time frame. On the intermediate time frame, the market will expand towards an old consolidation. There you go. A smart money reversal at a higher time frame PDOA will cause the market to form, will cause a market maker model to form on the intermediate time frame, i.e., ERL to IRL or IRL to ERL on the higher time frame. Okay, that's what I'm saying. ERL or IRL to ERL on the higher time frame will cause a market maker model to form on the intermediate time frame. On the intermediate time frame, the market will therefore expand towards an old consolidation which above or below rests the ERL or IRL. Is that a confusing statement?
No.
All I'm saying is that if we're moving from ERL to IRL and IRL to ERL, right? At these areas, you're going to see this. When the market moves from external or internal to external, resting below the external range is going to be what?
Stops.
No?
No, higher time frame.
Oh, our consolidation.
On what time frame?
Lower time frame.
Intermediate time frame, right?
Oh, okay.
So if the market is moving from ERL to IRL, right? Like this. This is ERL, this is IRL. What is the intermediate? So read the statement out loud.
Right.
Someone.
SMR at a higher time frame PDR rate, ERL to IRL or IRL to ERL will cause a market maker model to form on the intermediate time frame. On the intermediate time frame, the market will expand towards an old consolidation, which above or below rests the ERL or IRL.
Okay. Okay. Let's now look at that in the context of this schematic. So our price reversing at a higher time frame PD array in this schematic right here. This is daily ERL, this is daily IRL, okay? What's happening here?
Smart money reversal.
Okay. Go back to the definition. What's that going to cause?
Intermediate time frame MXM.
Do you see the intermediate time frame MXM?
Yeah. Okay.
Okay. On the intermediate time frame, what is the market going to be doing?
Expanding.
Get into consolidations.
Which rest below or above?
The higher time frame PDR rate.
Yes. So if the daily's moving from ERL to IRL, then on the intermediate time frame is moving from that PD array to an original consolidation that rests below the PD array that we are expanding to on the higher time frame. Why do you think market maker models always have original consolidations near our PD arrays? On the intermediate time frame. Have you not noticed that?
Yeah, that makes sense. Yeah.
Okay, so let's prove this to ourselves before we move any further with aftermarket cycles. By the way, this is something ICT does not teach you. He does not teach you this in the context of market maker models. MMXM Trader doesn't teach you this in the context of market maker models either. This is something that I have found through understanding how the market moves. So let's prove this to ourselves so it's not just me saying shit. Let's find an internal range on the daily and let's frame a move from external to internal, okay?
Yeah.
Let's pick something that's not so recent so we don't remember it. What is this on the daily?
A daily PDR rate.
Okay, actually, let's pick something that this is actually a weekly PDRA, isn't it? Yeah. Actually, we can do that. It's fine. What is this on the weekly?
Weekly PDR rate.
Weekly what? Internal or external?
Internal.
What does internal go to?
External.
Right? So what, based on the statement, when I look at the 4-hour chart, guys, what am I going to see on my 4-hour chart?
A market maker model that's expanding towards consolidations.
Okay, so
After an SMR.
let's be extremely specific. The market is moving from what to what?
Internal to external on the weekly.
Go back to our phrase. Let's use the exact words. On the so a smart money reversal on what time frame will cause a market maker model in the intermediate time frame, Yusuf?
The higher time frame PDR rate.
Okay. Do we have a higher time frame PD array?
Yep.
Yes.
Do we have an ERL or IRL to ERL move in hindsight? You can see it, right?
Yep.
Yeah.
So read this statement again, all the way through.
SMR at a higher time frame PDR rate, ERL to IRL or IRL to ERL, will cause a market maker model to form on the intermediate term time frame. On the intermediate term time frame, the market will expand towards an old consolidation which is above or below rests the ERL or IRL.
So without looking at what's the intermediate time frame, first of all?
This is weekly, so it's 4 hour.
Without looking at the 4-hour, what can I already tell you exists right here?
Original consolidation right below that.
Who wants to bet against me?
Horrible odds, man.
I don't need to look at the 4-hour.
Yeah.
I already know. Because PD arrays, and I've been telling you guys this, it's my focus of my entire mentorship, is that time is the most important thing, not price. Not price. I'm going to show you exactly why. Look at the weekly chart. This swing high is not printed as a function of price. What qualifies this as a swing high?
This fact that we put in a swing low
Over time, right?
over time. Yeah.
Okay, over time is important because as you notice, the market, if it was just the y-axis in this area, I'm going to redraw this area of price for you in the y-axis. Do you want to know what it looks like?
And shit.
This. I'm doing it for you. This is what you would see, guys. Would you ever take a trade if your chart looked like this? Be completely honest. If your chart looked like this, would you trade?
No.
So why do you care about price so much? This is what you're looking at. What is this? What causes these? Not price. Look at this range. Look at this range, okay? Is price moving outside this box?
No.
But this is a complete market maker model, isn't it?
Yeah.
This is not related to price, guys. Price has nothing to do with this move. Look at the box. Does price change in the box? If I have
Nope.
values high and values low, all I'm doing is I'm filling in a box with values. Can you trade that? No. So why do we care about price when the only thing that gives us an idea and an indication of movements is time? That is why I don't need to see the 4-hour chart to see a consolidation here. I know it's there, guys. It must be there. Do you see it?
Yeah.
Because what rests above that?
Original consolidation.
Above the original consolidation. What rests above that? A
Yeah.
time-based PD array. The reason why it's called a buy side imbalance, sell side inefficiency is because there has been a distribution of buys inefficiently over time. So what is price going to do? Distribute back into that area over what?
Time.
And cause what to be formed at the high?
Euro.
A swing high, an external range in time. This high is put in because we're rebalancing this inefficiency, right?
Yes.
So then the market can move from what to what?
IRL to Euro.
Oh, but that's only because of time. Because if you look at a box here, do you see any differential in price in this area? No.
No.
Just the y-axis. Look, if your chart looked like this, and imagine if I scrunch this all the way down. Can you trade this? If your charts always look like this, would you be able to trade?
No.
No. There's nothing there for you, right? It's just nonsense. The reason why we trade is because we have time-based arrays. Right? A PD array is a time-based array. Look at what we put beside all of our PD arrays. We put the time frame, don't we? Weekly IRL, weekly ERL. Why don't I just put swing high? Because how do I know what time frame swing high this on? On the 3-minute chart, is that a swing high? Yeah?
Yeah.
Okay, let me try and time this move on the 3-minute chart. Is that even possible?
No.
No. Because we have time arrays. So the 3-minute swing high means nothing to me in this case. But the weekly swing high does, right?
Yeah.
Okay, now we're getting into it. Now this is where market cycles really have power. This is why we know how the market moves. This is the logic behind it. Let's find a daily array and do the same thing.
Please, quick question. There should be a weekly SMR there, right?
Yeah. There is, on the 4-hour.
Or a weekly SMT, I mean.
Yeah,
sorry.
there should be. Let's
Okay.
Let's
It
prove
should be
that
at
to
that lows
ourselves.
with either.
Let's
Yes,
prove that to
sir.
ourselves.
Price scale. So yes. YM maybe? Or actually there's that low there, that one. That big fat one.
Yeah, right here.
Yeah, that one. That's SMT, qualifying SMR.
Right there. There you go. SMT qualifies the SMR. Look at the swing low.
Why'd you choose that swing low specifically? Because there's a lot of other ones, no?
Yeah, but that's the
Just-
lowest low. That's diverging.
Okay, you always choose the lowest one.
Yeah, why
Okay,
not?
understood.
Why wouldn't I choose? Why would I choose a higher low? Right. This one.
Yeah.
There's the SMT. How do we know there's an SMT? Because there's an SMR. Do you see how I don't need to see all the charts to know these things? I don't need to see them at all. I don't need to. I can just look at one chart and I can make assumptions. Like, I can tell you essentially every place where I know there's an SMT in the market. I can go to a monthly chart and look for monthly reversals and say there's probably an SMT somewhere on this monthly chart. I think I've done that before in some of our one-on-ones. You're going to get to that level with understanding of price. It just takes time, guys. So let's find another example. Okay. Let's look at this weekly swing high, okay? We come into this weekly ERL. Now we want to mitigate some form of IRL, right?
Yep.
So we create this array, right? We sweep this high. Let's go down to the 4 hour. What do we see right here when price comes down on the sell side of the curve? Consolidation, right?
Yeah.
In that consolidation, what rests above it? The PD array. That's just being targeted, right? Because now we're on the sell side of the curve. Let's do another example.
So in that scenario, right? That was a sell side of the curve. In that case, the PD array above the consolidation.
Well, yeah, because it also didn't go from external to internal. This is a full monthly like reversal. So let's look at. I think the better example would be like right here. This unmitigated PD array. Okay, you see this weekly PD array?
Yeah.
Right here is a monthly PD array where we reverse from. Do you see that?
Yeah.
So now we're going. The reason why that didn't fit the model perfectly is because it's monthly internal to external. So let's look at the monthly chart here. Okay.
Yeah.
So monthly is going from external and internal up here, right? What is up here? External highs, right?
External.
And the fair value gap, right? So internal as well?
Yeah.
Okay, so where is it now drawing back into?
Internal.
Okay. So here's a monthly internal. What exists here on the daily?
Consolidation. On the left side of the curve.
Yeah, right here.
Yeah.
Let's see. Yeah. Look, right above the monthly gap.
Yep. Right above it. Yeah.
That's over a week of consolidation. That's 2 weeks of consolidation almost. Friday to Friday, or a full week. 1 full week of consolidation. Putting in what? A time-based array. Look at this. See this daily consolidation right here? Putting in time-based arrays. You see that weekly fair value gap?
Yep.
Look at this. Consolidation. Putting in what? A time-based array, right? So it works on all time frames. Let's stick with our daily because that's the time frame we usually use for analyzing the market. Let's just look at ERL and IRL. Okay, so the market's in a sell model, and we trade back into this inefficiency. Okay, the market goes from what to what?
IRL to ERL.
Well, what is going to rest above this? What is going to be here on the hourly? You can already see it on the daily, but what's going to be here on the hourly?
Hourly consolidation.
How much cleaner do you need it to be? Right? Look at that. Is that not by definition consolidation?
Yeah, it is.
Right, if I condense this box, does price move at all? No.
No.
But then what are we creating? Look at what's happening over what axis is this PD array being created?
The time x-axis.
Price is just doing this. Look. Right?
Yep.
But this creates a PD array that we can run against. External to internal.
Fees, quick question.
Yep.
So, in a bullish, if we're looking for the sell side of the curve, if it's in a market maker sell model,
Yes.
the consolidation is going to be above the PD array.
Yes.
And if
Yes.
it's a buy model, the consolidation is going to be below the higher time frame
Yes.
PD array always,
Yes.
right?
Yes.
Okay, understood.
So look.
Okay.
Here we have this daily fair value gap, right? And notice how this candle doesn't trade into a premium of that gap, right? It's just a discount of that gap.
Yeah.
Then we come in and we liquidate and this high, right?
Yep.
Okay. So now we're going from external liquidity sweep back into what?
Internal
Okay. So on the hourly, what are we going to see right here?
consolidation.
Right in
on
this
the hourly,
box.
The target, yeah. Yep.
Do you see that?
Yep.
Retarget it. Now this entire thing here. Look. Do you see this big box right here? What does that look like?
Yeah. Consolidation.
Below this rests a what time frame PD array?
A daily PD array.
Nope. This is this is the hourly. Yeah, daily. Yeah.
Oh, I'm gonna shit my pants there.
No, but let's look at the daily. Okay. You see how this looks like
Yeah,
a daily
yeah.
consolidation? Actually, what rests below this
Yeah.
daily consolidation?
A monthly monthly IRL.
Look at that. Do you see how we've created now monthly IRL? Do you see how you knew that?
Yep.
Look at that.
Yeah.
It's all fractal. Do you guys see that? Look, what's happening here? This is not a function of price at all, is it? We displaced and then consolidated. Remember, IPTA market cycles is our lesson. Right? Our lesson today is on IPTA market cycles. So we're going to get to more of them. But, do you see how we displaced and then consolidated? Why do we consolidate? What's the function of it?
Consolidation, the function of it?
To create a time-based array.
Okay, yeah.
Look.
Oh, to create the fair value
Yes.
gap.
Look at the monthly chart.
Yep.
Look at the consolidation. How do we know there was a monthly PD array below this? What do we see on the daily?
The daily daily consolidation.
There you go. So
Monthly.
how do I know there's a monthly PD array below here? Because this is a function of time. Time is doing this. So look at what we did. Now let's relate this back to IPTA market cycles, okay? We expanded, and then what do we do?
Expand. We consolidate.
So in this region, right, as we consolidate, what are we consolidating? Which axis are we consolidating over?
The X.
So this expansion in the Y is complementary to this consolidation in the what?
The X.
And therefore we create a what? A time-based array. A
right.
buy-side imbalance, sell-side inefficiency on the monthly. There's a reason why every PD array has a time. This is a monthly BISI.
So what you said there basically was the amount of time that we spent and the amount of price movement is equal with after we have consolidation and the expansion over
They
time.
don't have to be equal. All I'm saying is that for this monthly
Yeah,
gap
not
to be
equal,
put in,
but like,
for this
yeah.
monthly gap to be put in, we need to consolidate.
Yeah. Okay,
Because if
understood.
price did this, would a monthly gap be put in?
No.
If price kept ripping higher, right? Then the monthly gap would just get larger.
Yep.
Think about that. This allows the monthly gap to be created in time. Imagine if price didn't do this, but look at the alternative path, okay? The monthly gap now looks like this. Look, this is the monthly open. This line, okay?
Yeah.
Or let's say this line. That's kind of janky, but there we go. This line's the monthly open. I'm going to put this on the inside too. If we don't consolidate, where does the monthly gap get moved to? Here is the monthly open, right?
Yep.
But because we consolidate, the monthly gap is now here. Do you see that? If the market always expanded, imagine how big the buy-side imbalance would get. Think about no consolidation in time. Imagine if all we saw was this. Where's the gap? Eventually the x-axis has to come into play, right? So this is your gap? What markets move like this? Have you seen markets that move like this, guys? Highly illiquid markets do this, right? Because there's so little liquidity that there's no consolidation. It just rips and then it completely crashes, right? Here we have fair value engines. Remember what I've talked about market efficiency engines. We're creating fair value gaps that we will eventually retrace. Does that make sense?
Yep.
Yep.
You can see a monthly market maker model forming, right? Here is a monthly high. Eventually we will reverse, and we will come from external to what?
Internal.
Yes, and that external to internal will be framed by a move that potentially looks like this. Right? Then you compare that with what I've taught you about lookbacks. Look at how these periods of time-based liquidity are arranged around PD arrays in time. I mean, that's an obvious statement, right? Here, I'm going to show you 20, 40,
Can
60.
you draw the deviations again one more time? Can you put them back?
Yeah.
I just want to see them one more time. Holy fuck, yeah.
But the deviations don't matter. Those are giving you some insight.
Yeah.
But look at the
Yeah.
lookbacks, right? 20, 40, 60. Okay? Now look at our weekly, monthly, and daily PD arrays. Right? What rests below the 60-day lookback?
Our monthly PD array.
What rests below our 40-day lookback?
Fucking another weekly.
Right? What
Yeah.
rests below our 20? This is our 20-day. Our 40-day has a what? Swing low.
40 has a swing low. ERL instead of IRL.
Yeah, look at that. ERL. Here's IRL, internal. Do you see how we're building liquidity in time? Not price, in time. The look back is giving you a function of the x-axis with respect to how price moves over time. Because the market only books efficiency, guys.
Yeah.
Down into what? Time-based liquidity pools. Okay, this is really good. So does everyone understand this concept?
Yep.
A SMR at a higher time frame PD array will cause a market maker model in the intermediate time frame, which will be the original consolidation that price expands towards. That in and of itself is more knowledge than ICT taught me in thousands of hours of watching, guys. Thousands. Just that. If you can just understand this, you will see the market differently. Okay? Now, you're more than welcome to try and disprove that as well. Go back and backtest, please. I'd love to hear the counterparty argument. If you can find a PD array where a consolidation doesn't rest above or below, I will be absolutely shocked. I'll be floored. Right? Let's look at the dollar. Let's look at a completely different asset. See, here's a dollar chart, right? Dollar chart, right?
Yeah.
You see how we had this monthly SIBI, right? What do I know if on the monthly chart, right, is the SIBI? What do I know immediately rests in this area on the daily?
Monthly daily consolidation.
Well, I see a clear daily consolidation, right?
Yep.
Because look at how the market books price. Is it expanding? Look, is it expanding here or is it consolidating?
Consolidating.
Here in this leg?
Oh, no, it's expanding.
Where is it expanding towards?
Consolidation.
There you go. Is it consolidating or expanding here?
Consolidation.
Where is it expanding towards now here?
The consolidation move.
Is it consolidating or expanding here?
Consolidating.
Where is it expanding towards?
Expanding towards.
Why are we consolidating? What are we creating here? Below these? Look at how prices moved on dollar to go higher. Look at the daily chart. Create a gap. Consolidate inside the time-based array. You see that?
Yeah.
Mm-hmm.
Which is now forming an immediate rebalance on the weekly. Is that a bullish signature? Yes! Right? Do you see that? Immediate rebalance on the weekly, the same thing as the daily consolidation?
Mm-hmm.
Mm-hmm. Yep.
Look at the 4-hour chart, right? We're seeing this 4-hour consolidation. So what rests below this 4-hour consolidation on the weekly? Some sort of PD array, right?
IRL. Yeah. Or PD array.
Yeah, and we can see that this immediate rebalance wick right here. On the sell side of the curve, right? That will be an inefficiency. Right? Do you see that? This implied fair value gap ICT taught it as? The overlapping wicks right in here, right?
Yeah.
Right? So that's a PD array. We also have this small weekly inefficiency. Right? Tiny.
It's also an inversion.
Yeah, it's also an inversion right here, yep. So you have to notice that time is the most important function of all of this, right? Like, again, let's go to our daily chart and we'll be able to find tons of hourly consolidation. Or let's go to our hourly chart. Or, you know, I don't want to stay on the higher time frames. Let's stick on the daily chart. Okay. Consolidation right here. What rests above it, guys?
PDRA.
What time frame?
PDRA or ERL? That's daily.
Time-based array.
Yep. What time frame?
Monthly. Monthly. Fine.
What rests above here?
Above that or below that?
Above it.
Above it.
Above it.
Look.
That's a fair value gap.
Have we come into a premium of the fair value gap yet?
No.
Oh, we're in it.
Right. Look at this. Look at this daily consolidation. Right down here. Okay. What exists below this daily consolidation when price runs it?
PDRA
Time-based
or
array.
ERL? ERL?
Yeah, on the monthly.
On the monthly, yeah.
Look. Fair value gap. ERL. Right?
Lord.
Function of accumulation allows for. There cannot be a distribution without an accumulation. Accumulation is the origin of every single move. Do you not see that? Accumulation, move. Right? Accumulation, move. Accumulation, move. Because you need an accumulation for there to be a move. So look.
Yeah.
It's a daily chart, right? Mm. What is this? In here. All of this actually.
Consolidation.
Consolidation, right? What rests above here?
Time-based
IRL,
array.
ERL, time base,
Monthly?
monthly.
Yeah. There you go. Highs.
Right? And then we manipulate the highs on the monthly and we go lower. You see that? So we
Yeah.
manipulate the highs with that one tick right there. So we consolidate, manipulate the highs right here, and then we move. So this consolidation manipulates that one high and then it consolidates and moves lower.
So, Feast, is this the algo just building this? This is a function of the algo making this, right?
Well,
The
there's only
consolidation.
consolidation starts every single move. Every single move in the market starts with a consolidation. Every single move in the market.
Okay.
Right? So because the market is building, right, liquidity, generating liquidity for the buy and sell side of the curve, and also accumulating orders, right? So
Yeah. Makes sense.
say we want to target this low right down here. That's a consolidation on the daily, right? So
Yeah.
what rests below here? Monthly for value gap,
Time-based
right?
array.
So the monthly for value gap in
There
here.
you go. Right here, value. Yeah.
How do we know that? Because when the sell side of the curve is engaged, the price will engage this consolidation low, right, to order pair, and below that will be a time-based array.
Yeah.
Now, price needed to consolidate to move higher. Do you see how it came into this daily fair value gap and then consolidated and moved higher?
Yeah.
Because what was it once targeting? Well, look at the daily chart.
Up there in the top, right
Yeah.
there.
What do we see here?
Consolidation.
Look at the monthly.
Consolidate.
Look at the monthly just going from ERL to IRL, right? Right down here,
Also, a PD array.
right? We have IRL, and then it's coming
Yeah.
back up into these equal highs. Look at it consolidating on the daily to expand. Consolidating into the expansion to take out the highs, right? But then when order flow reverses, where's the target? The consolidation. Because what rests below that now? A time-based array. What rests above this consolidation? A time-based array. The monthly is just doing this, guys. Look at the monthly chart. It's just doing this. Right? Like it went from ERL to IRL to do... Here's what the monthly looks like. I promise you. Watch.
Yeah.
Right? Look. Look how clear the monthly chart is, right? IRL down here. Do you see this?
Yep.
Also, I guarantee you SMT. I'll bet you $1 million SMT.
There
Right
it
now.
is.
$1 million right now. My own hard money. If I ever make $1 million, I just type in SMT.
Goes to me. Goes to me.
Okay, Yusuf,
got my-
I'm gonna owe Yusuf $1 million if I'm wrong about this SMT with a yes.
Oh my god.
Too bad I'm never wrong. No, I'm joking.
Oh.
Right? Look.
Yeah.
How do you know? Because there's no smart money reversal without an SMT. That's how I know. I don't need to see it. I already know. I already know price is going into these equal highs now, right? SMT, SMR, look at the projection. Where is smart money accumulating price? Look at the projections. Right? Look at the daily projections off this. Or the weekly projections. Look at the last manipulation leg. right? Brings us directly. Look where we're reaccumulating right now for another maybe move higher into all-time highs. Who knows? All I know is that each of these moves, right, is measured with respect to time and price, but first time. That's why PD arrays are time-based arrays. That's why SMT is a time-based tool. There's no such thing as SMT and price, guys. SMT and price looks like this, right? Now notice your SMTs look like this. What axis are you dragging your SMT on?
Yeah, exactly.
Right? Like, your SMT can't look like this, can it, Yusuf?
Nope.
Oh, you need.
This is what it looks like on the y-axis. Look, the difference between this monthly low and this monthly low on the y-axis is just this. That's your SMT. Does that give you any insight?
Nope.
Right? Are you gonna be? Does price give you any clues here about what it's doing? Just price? No. It's only time that helps you out and says, oh yeah, here's the x-axis, here is the smart money reversal, and then we can say that smart money is accumulating within this wick. Right? This wick right here is where smart money is accumulating. Yeah. Let's see. Another power of 3 move. Do you see how this monthly candle opens up with almost no wick right here? Very, very small wick.
Yep.
Or look at this. Look at this candle right here. Right? Almost no wick. Yeah, that uses the liquidity target before a retracement, a retracement of price, which will then send us higher. All of these things are specifically coded, and they're usually coded with PD arrays. Like, look, this weekly close, no wick. That's manipulated on the Monday. What do we trade back into? This, I guess, this breaker or this breaker right here, right?
Yep.
But it's all time based. Like, it's all time based, not price based. We're getting very off topic. But okay, let's finish the lesson off in the next 20 minutes. Okay, so consolidation can lead to expansion. What else can consolidation lead to?
Consolidation can also lead to AMD reversal or continuation.
You think consolidation can lead to reversal, really?
No. AMD. Like, we can AMD then reverse, but we can't go from
So consolidation must always go to what?
expansion.
There's nothing else. Okay?
Yep.
That was a trick question. Consolidation cannot go to retracement, cannot go to reversal. Okay? Consolidation can expand. And there's 2 ways price can consolidate into expansion. The 2 ways are this.
Yeah, that's what I was talking about.
Or
AMD
this. Okay? Price can either accumulate or consolidate, then expand, then retrace, then expand. So C, E, R, retracement, E. Or consolidation, what is this called here?
AMD, so that's the manipulation.
It's expansion. We're going to call it expansion.
Expansion.
Consolidation leads to expansion. Expansion, what is this here? Expansion can lead to what?
Reversal. Or
Yep.
retracement. So
So
reversal.
consolidation, expansion,
Reversal, which is expansion.
Reversal?
Retracement. Expansion.
what must consolidation always lead to?
Expansion.
So if we are bullish and a consolidation manipulates the low of the range, right? It can also do this, right? So look at today's price action on the NASDAQ. Right, some people might be like, well, look, we consolidated, then we reversed, right, in here?
Yeah.
Really? Is this a consolidation into a reversal? Or is this, right? What's the higher time frame trend?
Bullish.
Consolidation. So really what's happening is this. Consolidation. Right? Expansion. Retracement. Right? Expansion. Retracement. Expansion. Where is the consolidation on this chart? Just here, right? The reversal happened up here with this SMT, right? That's where the reversal happened. Then we consolidated below a time-based array. So we reversed, we reversed, and then we consolidated, okay? Make sense? You see the reversal and then consolidation?
You look for the SMT on the intermediate or the higher time frame?
Whatever time frame it's showing you on.
Okay, understood.
So in this case, we didn't consolidate here into a reversal. Like, this was just a retracement in the market. In fact, what we did was we had like today's move looks like this. Consolidation, right? Then expansion, retracement, expansion, reversal down here, right? You see that?
Yeah. Yep. Reversal.
Now we're consolidating. Now, can consolidation lead to a reversal?
No.
So we have expansion. Now we have another consolidation. We have manipulation of that consolidation. So expansion lower, right?
Yep.
So if this wanted to reverse here, right? What would it need to do? Retrace, then reverse, right?
Yep.
Right? Accumulation, expansion, retracement, reversal. Because retracement can lead to a reversal, right?
Yep.
But this couldn't just simply expand lower like that. It wouldn't look like that. Okay? Because the trend here has been bullish. So then we get the manipulation lower, expansion, consolidation. Right, now we're up here. Well, again, what do we have?
That
A
one is
retracement.
Yeah.
retracement.
Which is a form of what?
Yeah.
We're just going to use the words expansion and consolidation from now on. Do you see what I mean?
Expansion.
Yeah, expansion,
Yeah.
expansion,
Yeah.
consolidation, expansion, 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 consolidation,
Consolidation, expansion.
expansion. Do you see how if we don't use all these words, it becomes way easier?
Yeah.
The market's either expanding or it's consolidating, right? What's in here? This is a retracement. Sure. What's a retracement? Just a consolidate. Just an expansion, right?
Yep.
Yeah.
So we have an expansion, a consolidation, followed by what?
Expansion.
Remember the definition here. Retracement is an expansion that rebalances or reaccumulates in a directional movement. All of these retracements, right, are expansions that do what?
Rebalance.
Directional movement.
Accumulate.
Draw.
What's the directional movement here?
Down. So we're rebalancing it so we can move down.
What's the directional movement in this leg is down?
Oh,
No.
that was up, but I'm saying
Yeah.
we're rebalancing it to move down.
Yeah,
no?
sure. You look at the higher time frame and say that. But what's, like, in this price leg, right? What are these retracements offering? What are we tagging every time we retrace?
IRA?
Yeah, some form of internal range, right?
Yeah.
So so a retracement is defined by an expansion that does what?
Rebalances.
In a directional movement, right?
Yeah.
Now, what's a reversal defined as?
But it says towards the draw, right? So
Yeah.
then in that case, our draw would be
No,
higher,
towards. You're reaccumulating in a directional movement towards the draw. Directional movement.
towards. Okay, yeah, I'm dumb. Okay.
That's all good. Here, a directional movement, reaccumulation. And then you can just say retracement. Follows or stays. Retracement legs expand after towards the draw of liquidity. That makes more sense?
Yeah.
Okay. That makes more sense?
Yep.
Okay. So what's a reversal? It's a special type of expansion, which is what?
Different video area.
Where are we reversing from?
CV.
Higher time frame PD array, right?
Yep.
So now we can get this here. You might think, oh, it's just another retracement, right? How do we know it's a reversal? What shifts here?
Do we know is it
Market structure, right?
Yeah.
Do you see how all of these retracements have respected the discount PD arrays of the leg? Again.
Yep.
Look, discount of this leg is this. Okay? Look how we come right into that discount level, right? Now look at this. Discount of this leg is this. Look how we come into the discount PD array and we respect it, okay?
Yep.
Now look at the discount of this. Let's use this leg. Do you respect that discount? No.
No.
What about this
Yeah.
discount? Do you respect that?
No.
What about this discount? Do you respect that?
No.
So retracement is defined as a what? Or a reversal?
Expansion.
Can
Yeah.
only happen
When they're a high time frame.
where we disrespect the liquidity matrix.
Yeah. Well, you can obviously see that we're reversing here, not
Yeah.
retracing, right? It's a hindsight thing, but you can, like, again, look. Retracement, retracement, retracement. Well, that's probably not a retracement, is it? So now this consolidation, is it going to lead to another move back up?
No.
So what could this consolidation do? If this is a higher time frame PD array in here, it could consolidate, then expand, then retrace, then reverse. Right? The reversal is
Yeah.
going to be this market structure. Sure. Make sense?
Yep.
That disrespects that PD array. So all you have to do is remember that the market is consolidating or it's expanding. And when it's expanding, it's either retracing or reversing or expanding. There's three types of expansion, right? Displacement towards in a direction, retracement against that direction, and then reversal is reversing against that direction. Deal?
Yep.
Okay. And then the most important thing is that we can say that when price is moving from ERL to IRL on a higher time frame, it is running out an old consolidation that rests above or below the ERL or IRL on the higher time frame PD array. So today, right, let's look at the 4-hour chart, reinforce all the concepts. What is this on the 4-hour? Internal or external?
The 4-hour, that's internal.
What is this on the 4-hour? Internal or external?
External.
Okay. So on the 15-minute, what rests below this 4-hour external? Convince yourself that here exists accumulation on the 15 in form of consolidation, and here exists a consolidation in the 15. Convince yourself of that before you even look at the chart. Why? Because
Wait, hold on. Below the ERL, we have consolidation? I thought we always have it above.
Oh yeah, sorry.
So, okay, understood. Yeah.
There's consolidation here, and there's consolidation here, okay? We're going to convince ourselves that before we look at the 15. Because smart money reversal, ERL to IRL, IRL to ERL, will cause a market maker model to form an intermediate time to form on the intermediate time frame. On the intermediate time frame, we're going to be expanding towards old consolidations. So here, right, the market went from this internal range here, right?
Yeah.
To this external range down here. So resting above this external range right here was 15-minute consolidation. Let's prove it to ourselves by just wait. Let's get rid of this. Let's make this wider. Let's look at the 15-minute chart.
Nah.
Right.
That's crazy. Yeah.
So resting above the swing low is now going to be what on the 15?
Consolidation.
How do we know that?
That's just how shit
That's
looks.
just how the market works. Now we're gonna get rid of this purple box, right? In this internal range, resting above this or below this internal range, what are we gonna see on the 15-minute chart?
Consolidation.
Do you see it? See how it's internally consistent? I can't cherry pick this. How would I have any idea? How would I know there's a consolidation here? That's why I played long, guys. Do you see that?
Yeah.
You see why I played long? So I'm using this lesson that I'm teaching you right here. Right? If we want to come into this 4-hour gap, what are we going to create? Right below it. Look at how we created this consolidation and moved away from it. But we created this 4-hour gap, and I knew the 4-hour chart was going from what to what.
External to internal.
So we create the consolidation. We manipulate away from it. And then what are we coming back into? That's the 4-hour, right? Let's look at the 1 hour. Same exact argument, guys. Okay, 1 hour. What is this right here?
1 hour ERL.
So what rests right in here on the
5-minute consolidation.
So let's say 5-minute consolidation. Now, what rests in here?
There.
What is this?
There's
What
a
is this?
time-
ERL or
Time-based
IRL?
array.
That's a time based. That's a hourly civvy.
So what
there should
rests
be-
in this hourly civvy right below it?
There should be 5-minute consolidation.
Okay. Well, what do we see right here? That's a perfect consolidation. Look at the box. Is price moving out of the box?
Oh, nope.
Okay,
Just
so
done.
what rests below this? An hourly ERL. 5-minute consolidation. Where is the target? That low. Right?
Yeah.
That's why price comes into that low. Look at, again. Here's an hourly swing low right here, right? Look what rests above this hourly swing low. Right?
Yep.
You see that?
Yep.
Okay. So there we go. There's our 5-minute consolidation. Now we're going back to the internal range. Right? Below the internal range will rest what? I'm going to get rid of this and just draw out the gap. Below the internal range will rest what?
Below the internal range will rest 5-minute consolidation.
Okay. Here's a part of the internal range. Right? Here's our
Yeah.
consolidation below the internal range. You see how we create a consolidation?
Yep.
Inside the internal range, below it. And then we come in and we sweep it. Because what's the market maker model targeting? The consolidation, right? That rests below the internal range. The
Yep.
consolidation that rests below the internal range. See how we create the consolidation? Because we expand so aggressively, right? Price comes up and consolidates before manipulating the external range. You see how it's done with time? Because why doesn't this chart look like this? Right? A fair value gap and then that'd be nicer, right? If this was our fair value gap right here.
Yeah.
But look how we expanded aggressively, right? We didn't have time to consolidate in here, right? Look at this hourly gap. This hourly gap was just massively displaced. So look how we create an internal power of 3 move. Right? We create the consolidation inside the gap. And then we run it. Still internal range. So the hourly is creating an external high on the 5-minute to run. Just like we see here. See that?
Yeah.
Because the hourly is going from what? External to internal, right?
Internal. Yeah.
But because there hasn't been an original consolidation that's been created, it creates one. And then it runs it. Isn't that interesting?
Yeah.
Because look, if that consolidation was right here, right? And then the hourly and the hourly gap formed like that, right? And then
Yeah.
price did this, so if it did this, that would look more like we expected to, right?
Yeah. Yeah.
But
But
we
it
don't.
didn't create it below it, so we
Yeah.
have to create it, run it, and then
Yeah.
go.
So we create an internal range of liquidity. That's why it's called an internal range of liquidity. Inside this fair value gap, and then we run it. Now that looks similar to this, doesn't it? Right?
Yep.
Now that looks similar to our market maker models that we always use. So like when we're looking at the daily chart, right? When we're going out daily, we're just framing like a bread and butter setup. So say we're framing our bread and butter daily setup. So I'm going to just start on the daily chart. This is why I always say start on the higher time frame. We have daily external, daily internal, right? Once we sweep external, we want to look for internal. Okay. This move back in to internal is going to be a complete hourly market maker model that looks like this, right? And what are we going to see right here on the hourly then?
Hourly consolidation.
Right below there, right?
Yep. Right below it. Yeah. There you go.
So let's start daily.
And
gap.
so it runs up higher just because it's a higher time frame. Like,
Yeah.
like you have to give it some room. Okay.
Right? So here's a daily gap, and the consolidation's actually above it in this case, but that's what we're running out, right? We end up running out this consolidation. And I guess we
Yeah.
have a lower time frame consolidation right in here.
Yeah, it was CPI. That was a little
Because
consolidation.
the news makes it a little bit harder, right? Like these high volatility things make our original consolidations less clear. But you're going to have days where it's so fucking abundantly clear. Like, again, internal goes to what?
External.
Okay. This is going to be the clearest This is going to be the clearest market maker model you've ever seen. Look at the consolidation on the hourly, right? Do you see that? Do you see this box? Like this box right up here.
Fuck, that looks so clear now.
Yeah, or even just this, right? And look how it's symmetrical in price and time. If you recognize that the market, when it oscillates from ERL to IRL, is creating these consolidation and expanding towards. Like, let's look at really, really clean bread and butter setups. Let's use a higher time frame, for example. Okay. Weekly FVG, right?
Yep.
Once we engage it, what's the swing high? Right here.
That's
Then we have another one right here. Look at that. Look at the 4-hour consolidation. Above that, right below that swing high. Right?
Yep.
And then the higher time frame consolidation is right here. Right in this big box. Right?
Uh-huh.
So every time we get that directional movement from ERL to IRL, IRL to ERL. Let's do an IRL case.
You're going from ERL to IRL now?
Yep, ERL to IRL.
ERL to IRL.
Okay. So we swept up the low. Now what's the target?
Our IRL. Oh, yeah, that little.
Right, this internal range. Or you can even say this volume imbalance, whatever you want, right?
Yep.
Let's just mark it all out. This area is of interest to us. There you go. Right?
And it should also be on the left side, right?
What do you mean?
So that ERL that we took, right?
Yep.
So if you go to the left where you drew it,
Yeah, of course.
there should be consolidation there too, right?
Yeah, of course. Look.
And there's that whole box actually. You can go all the way to the left.
Yeah.
Yeah.
Because it has to be. That's how the time-based array is created.
Yeah, it has to.
Right? There won't be a array created without a consolidation. So let's keep going. Let's do another example from like way back when. So there's no way we can cherry pick this. Let's go to like, this is historically some of the least volatile price action of all time, and it still works. So here's a swing low, right?
Mm-hmm.
Here's an internal range. We know that the market is going to go from here to here. We know that. So resting right below or right above this low will be some sort of box that we can see as a consolidation. And then resting right above or right below here will be some sort of consolidation as well on the 4 hour.
And so I know after that we don't go IRL back to ERL. At that point you just have to consider narrative, and then if we're gonna go higher, right?
What'd you say?
In that example that you just chose, right? We swept the ERL, and then we went to IRL, right? We book IRL to ERL, but you'd have to consider like after that like narrative whether we go like higher or not. Right?
Yep, exactly. Well, there's also monthly arrays and shit there too. Okay.
Yeah.
4 hour chart. Okay, so this is the move, right? What do we see on the move down into this level? What's right here in this box? Couldn't be clearer. Right? What is this? Is a massive consolidation in the market, right? Is price moving out of this box, guys?
Nope.
No. Okay, that's the target. Now price reverses. I'm going to get rid of this purple box because I'm going to get rid of this box and just say somewhere in here below this purple box will rest a consolidation I can target. I see this. Is that a consolidation?
Yes.
Yes. Price will target that consolidation, right? You see all these, like, again, any time frame, pick any time frame, Yusuf. What time frame? Give me a higher time frame.
Let's try. Oh, you want a higher time frame? Let's do monthly, daily.
Sure.
Monthly, daily. Let's go.
Okay.
I like monthly, daily. Beautiful bias.
Do we see this fair value gap right in here? Right? Or this one too, right down here. Okay. This is the internal range. Where is price going to now?
The external.
Yep. So let's look left. And we can say, you know, here. On our monthly chart, right? That's the draw?
Yep.
Internal to external. We can even choose a leg that's like easier to see on the monthly. We could choose. Actually, yeah, that's not a good leg to choose because it's just so much price action. I don't want to have to zoom out that much. Let's pick a smaller leg. Here. Okay. Internal. Where's external?
External is.
Right there, right?
Yeah.
Right? Internal to external, right?
Yeah, I thought it didn't hit for a second, but then I remember seeing it on the daily, yeah.
Yeah.
The monthly.
See that? Now go to the daily.
You see consolidation
So
below.
what's going to rest on the left side of the curve right here?
On the left side, right there should be consolidation. And then, yeah. I'll take that.
Yeah, that's consolidated. This is the daily chart. That's consolidation.
Oh, yeah. That's daily. And then it's also there at the top. Where
1, 2, 3, 4, 5, 6, 7, 8, 9 days where price stays within this range. That is consolidation. Right? It's part of this expansion, but if you zoom out, that's a consolidation within this larger expansion. So is this consolidation here, right? These are historically non-volatile times. You got to remember that, okay?
Yeah.
So this, like, look at the range of this. Compare this daily chart. Look how many points this daily chart was back in the day. 38 points.
God damn.
Oh my god. Wait, the entire day's range was 38 points.
Is that ready to go to like the hourly and see this shit?
Is he not going to let me go back that far? Yeah. Bro, are you guys seeing that? The entire daily candle on like a bullish day is 35 points. How are you a day trader?
There's no way ICT worked back then, right?
Yeah, of course it did.
No, I definitely, yeah. It
Historically non-volatile. You just have to use more contracts.
Yeah.
Bro, look at how yeah, let's see. How many days does it take to get 100 points? Oh my god, this is actually disgusting. Imagine trading in 2012.
Bro, I was a fucking...
Imagine waiting 11 days to get 100 points.
Bro, you'd have to catch the entire day's move to get the 40 points.
Nah, you have to be a swing trader. Look at these candles.
I mean, it doesn't look that hard, though. You just fucking long to, like, a...
Dude, look at this daily candle on NASDAQ in 2011. It's 8 points. 14 points. What the fuck? Okay, that's very, very interesting. Okay. Monthly. Now we're going to find a consolidation. Look at that. Right? Look at this entire move, by the way. The entire move is 300 points, dude. That happens over 86 days. That's heinous. Okay, well, I'm getting sidetracked. So that's consolidation can go into expansion only, and then again we're going to use retracement and reversal as equivalent to expansions. So what can a retracement go into? What can an expansion go into?
Expansion can go to consolidation. I mean, if we're using simple terms, yeah, consolidation.
Yeah, right. We can retrace into a consolidation. Can we retrace it to a reversal? Can expansion go into a reversal?
Expansion go to a reverse. Expansion can go to a reversal.
So retracement can go into a reversal too, right?
Yes.
We've seen that, right? Like, here's an example of that. So we have a price leg. We retrace. Consolidate. expand, right? And then reversal is a form of consolidation, or is a form of expansion, right? So an expansion can go to what? A reversal. Can a retracement after a reversal? Yes.
Retracement after reversal, yes.
Yeah, right. That would be a retracement to a reversal.
Yep.
What about a retracement to a consolidation, or a reversal to a consolidation? Expansion to a consolidation, right?
Yeah.
So here's the price, right? This is a retracement into a reversal. Here's a retracement into a consolidation, right? Then let's say we have an expansion, a retracement, a reversal. And then we can also have a retracement off that reversal, right? It can do everything. So all you have to worry about is these. Make sense? That's why I like to get rid of these and just say, look at this. Expansion can lead to everything, and consolidation can only lead to expansion. These things are just the same thing as expansion. They're just special cases of expansion, okay?
Yeah.
Does that make sense? Alright, that's the lecture.